Tuas is a telecommunications business that offers services in Singapore. In 2016, they won the license to become the fourth mobile network operator in Singapore and started building their network thereafter. In 2020, it was spun out of the larger TPG group when TPG merged with Vodafone. They launched their mobile offering in 2021 and have since broadened out their offering to things like broadband. When Tuas was spun out of TPG in 2020, we knew the business and opportunity well, given we were already covering TPG Group. Tuas at the time was a small, illiquid, with no analysts covering it, small cap. We saw a significant opportunity to disrupt what we saw as an archaic mobile market in Singapore. Plan inclusions were very low, gigabits per month were very low, and in some instances, you didn't get unlimited text and calling, things we take for granted in our plans in Australia and New Zealand. In addition, the operators and the incumbents in Singapore all had legacy old networks that they had to maintain. And so they had much higher cost base, a much more bloated cost base, which we saw as an ability to disrupt. What we also really liked was that TPG founder David Teo was going to focus all his attention now on Tuas. We highly rate David as an operator. He's got a dogmatic focus on cost, and we thought that with that approach, they could offer incredibly compelling value to the customers of Singapore and really undercut their competitors. Now, he did not disappoint, nor did the Tuas management team, and their first mobile plan was launched in 2021, and it was more than 50% cheaper than any other product in market, despite having way more gigabits per month, almost double the gigabits per month than all their competitors, making it the most compelling offering that the Singaporean market had ever seen, which was obviously extremely highly disruptive to that market. Tuas has performed extremely well since we first invested in this business in September 2021. It's appreciated by over 300%. And the management team have executed incredibly well, beyond our expectations. They've gone from nothing to over 10% mobile market share in just over 4 years. They're now broadening their offering into things like broadband. And they've gone from no revenue to almost 200 million of revenue and a loss-making business to over $50 million of EBITDA. So as I said, Tuas has exceeded our expectations in terms of operational execution. We believe that their target audience is broadening in the mobile space from just value customers to everyday customers, and hence their addressable opportunity is also expanding. As I mentioned, they've also launched a broadband product, and true to their nature, it's over 50% cheaper than the nearest products. We believe that they could take significant share in that market. They also have over 1 million subscribers on mobile that they can now market their broadband products to. So we could see quite a quick penetration within the broadband space. Beyond that, it's hard to say. Logically, you'd assume that they'll move into small to medium business telecommunications offerings, such as fibre and mobile. And then even beyond that, David Teo is Malaysian, and hence we wouldn't be surprised if we saw Tuas offerings crop up in other markets, such as Malaysia and Southeast Asia over time. Now, with all that being said, it has performed extremely well. And is now starting to price in some of these more optimistic outcomes, and hence we're just managing our position, but remain very excited of Tuas's prospects over the medium term.